Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 17th to the 21st of February 2020. We're going to look at the four main indexes, take a look at stock futures, what is Monday looking like. I will also do this in our Monday buys video. We're going to look at the entire S&P 500 performance for this week and Friday, see what stocks were up, what stocks were down because there were some strong sectors. Then we're going to look over at oil, the dollar, silver, gold, bonds, and mortgage rates. And then we'll also look at mortgage rates and bonds. Those are kind of interesting. We've seen the shorter or the 3 month yield actually be higher than the 10 year. So normally it's inverted currently, so that could be a little bit of a risk in the market. But overall, that's what we're going to be covering in today's video. So if you are brand new to the channel, have not yet subscribed, I would really appreciate if you do hit that subscribe button below. Hit the thumbs up if you do enjoy this content, find it entertaining, and if you would, please go down below, drop me a comment, say hello, let me know what stocks you're buying this week, or if you have any questions. I always want to have some interaction with the viewers and subscribers. I think it's a lot of fun just to go back and forth, just asking questions or just saying hello. So with that said, let's go ahead and get into the video. So S&P 500 was doing pretty well from Tuesday and Wednesday. Tuesday we started the market low on the day, going after President's Day. Wednesday, we picked it up by 0.47, kind of erasing that Tuesday loss. But then coronavirus came back into the minds of investors and individuals out there as it began to spread to Korea. I believe it's overseas in Italy as well. And I know one of the individuals here from Oregon had actually had it affected over in Japan. He made his way back after had been treated for it. Didn't show symptoms of it, but was released. So it's kind of interesting how it's kind of being spread and how it's also affecting the market. So Thursday, Friday hit pretty hard there on Friday with fears of coronavirus. So overall, 5-day change down 1.25%. It's also affecting us here on Monday. It's spreading into the market and we're seeing that. And I'll show you here in just a second. The Dow Jones basically flat on Wednesday. That was their bigger of the days there, just not negative. Again, President's Day was closed Tuesday, Thursday, and Friday, all negative. The NASDAQ is in second place as far as being hit, the second hardest, down 1.38%, right behind the S&P 500. This one actually is in second in comparison to all four main indexes. The S&P 500 is second place. The Dow Jones is in third. The NASDAQ got hit the hardest, down 1.59%. Really good whack there on Friday, down 1.79%. As long as a lot of those tech companies overseas were hit pretty hard here. And that's what that effect is. They were doing really well earlier in the week. Tuesday, Wednesday, putting on those gains. Thursday, coronavirus, and just kind of media kind of spreading it out. They started around 3,600 points on Friday, ended around 3,700 points. They started 3,700 points on Friday. We can see here, started 3,700, dropped to below 36, just kind of lost about 150 points there on the day. They are continuing to lose. This is over a week. Guess what's going to happen tomorrow? I'll show you here in just a second. The Russell actually did the best. This is kind of what's interesting to me. Normally when I've done these weekly recaps and I've looked at the S&P, the Dow Jones, and the NASDAQ, when they go higher by quite a bit, 1 or 2%, we see the Russell 2000 kind of slag behind. You can see here year to date, it's only at 0.61%. Now, when the other indexes fall pretty hard, 1 or 2%, the Russell normally falls maybe 2, 3%, sometimes even 4%. It falls a lot faster sometimes than the main indexes. In this case, we had a bit of a red week, but the Russell was actually positive here on Wednesday and Thursday. It did lose about 1% on Friday, but overall, down for the week 0.53%, putting it in first place as far as not having lost the most. Year to date, still up 0.61%. Kind of interesting. This is small. A lot of those smaller mid-cap companies located within here. There's 78 pages of here. I don't know all the companies. There are very little of the companies that are actually associated with the Russell 2000. Very interesting there. That's ticker symbol RUT. Now, jumping into stock futures, I just refreshed this earlier and it had dropped. Yeah, there we go again. S&P just dropped before my eyes to 1.66% negative. The Nasdaq was at 2, now 2.09, and the Dow Jones is continuing to fall at 1.64%. Here, across the headlines right now, last Friday, South Korean stocks record their worst day in more than a year as the coronavirus cases surge. So it's affecting overseas in Korea. We can see the Hong Kong market's currently open. It's down 1.59%. We can see a few other kind of locations. If we head back to the markets page here, let's click on markets. And we kind of scroll down here towards the bottom. It's not showing any of the active. But yeah, South Korea, coronavirus is still out there and it's affecting the markets overall. So this is Friday. We can see Friday overall technology. That's why that Nasdaq I hit. Technology holds a good portion of the Nasdaq positions. And Apple out there getting hammered down 2.26% on a Friday. So it's down at $315. Google, Facebook, Microsoft, Amazon. I think there's still more room for these companies to fall. Financials didn't bleed out as much, but if we're looking at the S&P 500 on Friday, we can see here that what sort of highlights, what areas are kind of green. Now, if we look over here in the beverages, Coca-Cola and Pepsi, both pretty green. I think those are very good dividend aristocrats. Walmart also in the green. We can see some of the healthcare companies in the green. Pfizer, not so much. I think it's negative in my portfolio. I'm pretty excited. I want to see this one continue to fall a little bit further. But Johnson & Johnson, positive. AbbVie, positive. Also in the utilities, the only one that's here in the red is, well, there's two in the red. Obviously, the two that I own, we have the Southern Company and we have Consolidated Edison. So besides those, we have NextEra in the positive, Duke Energy in the positive, Dominion Energy in the positive. I thought oil was also a little bit positive on the day, but turns out it is not. So let's look at the 1 week performance. Okay, so over the past week, I wasn't checking out NVIDIA, but I can see right here it went up 8.6%. So that may have been due to earnings. I wasn't following NVIDIA. So over here in the discount and variety stores, so we're looking at Walmart, Costco, Dollar General, up 4.4%. I wonder if that was off earnings or something else. We can see Target in the red. We also see credit services. I was reading a study how there's now, I don't know the specific number, I was kind of reading it offhand, but there's just so many millennials that have so much credit card debt. I don't have any credit card debt myself, but I know a lot of individuals who just cannot get started building their wealth and just investing due to credit card, whatever it's called, debt. And Apple down 3.64%. Utilities are one of the main highlights here that are just kind of mixed of green. If you have some of these good companies, they're pretty well green. Duke Energy up, drug companies, biotech companies also in the green. So just kind of interesting to kind of see how it kind of plays out in a week. We saw that the markets themselves were negative, but there's some little pieces out there that are on their own and actually kind of positive there on the week. Okay, so let's continue on. Oil is making a bounce back. Kind of interesting to see it kind of bottoming out. I've been buying up Chevron. I'm not interested in Exxon or any other oil companies. I think that's the only company I will be buying is just Chevron, ticker symbol CVX. And I may not actually hold it for too long. It's one of those companies and industries that it's oil. Kind of looking at it, I like to go more into the future as far as where I see is individuals, millennials, and the younger generations kind of moving forward. If I could afford it, I would probably buy a Tesla myself. But, because I do think that technology is in the right direction versus, going back to fossil fuels and oil, gasoline, and such. So we'll see how this kind of plays out in the future and how long I hold Chevron. So dollar is continuing to move higher. I know this is very high at 99.53. Now we can see here Tuesday, Wednesday, Thursday moved pretty high. Friday it did lose a bit of its steam. I think it'll kind of make it back. I haven't seen this over 100. But you can see it's currently positive there. If we look at the month though, it's just been chugging higher and higher and higher from 97.39, just moving higher. I don't know what is causing this to happen. Usually when the dollar moves up, I see gold and silver moving lower. But in this case, silver is just continuing to chug higher. I think we may see a $26 point in silver. It's been a very long time since we've seen $26 in silver. It looks like it was probably 10 years or more, but I think we may be going back to that age. You can see here, we talked about this quite a while ago where silver was trading at $14 per share. And this was, let's see, 2018. So let's go back 1 year here. $14 right here. This would have been an amazing time to buy. May 2019, below $14. If you wanted to own silver, I don't own any paper silver. Gold also moving higher, 5-day change, up 3.83%. If we look over the past 6 months, we can see right around December timeframe, gold hit a bottom and has had one of the highest points recently. If we look over the past 5 years, gold is at an all-time high over the past 5 years. I've seen this kind of play out and get discussed on many channels. Gold is making a comeback. Why is gold rushing back to all-time highs? Is that a sign for the stock market here in 2020? And the bonds, look at those bonds returns. Normally bonds are pretty stagnant, but 5-day change up 0.63%. I do own a few bonds. We can see here over the past, let's look at the 1 year. I know bonds have shot up an amazing amount in just a very short amount of time. So yeah, it looks like it is about 1 year. No, whoops. 1 year. Oh, I was looking in the wrong area. Up around 7.51%. So even though, say you're trying to get some safety moving away from the market, you're trying to diversify yourself to kind of de-risk yourself, moving to a little bit less invested capital in the total market or the S&P 500. Maybe you're moving 20% to bonds, 80% to the S&P 500. That way, when there are pullbacks in the market that dip below where you initially kind of bought or sold off pieces of your total market to invest in the bonds, you can begin using some of that capital to just kind of buy in on those days where the price does fall. So bonds here, this is kind of where I want to kind of showcase to you. The U.S. Treasury bonds, the 3-month one is trading at a 1.52 versus the 10-year, which is at a 1.47. So this, I don't have the yield curve, but let's see here. It doesn't show it. I'd have to Google the yield curve, but it is currently inverted. So there's a lot of signs out there. Gold, bonds, there's coronavirus going out there. There's a lot of little risks in the market that investors are kind of seeing. So I don't know how this will kind of play out. I still do think 2020 should be pretty positive. Going into presidency, I don't think, I think 2020 will be one of our last greener years. I think we put on a lot. In 2019, 30%. In 2017, I think it was around 20 or so percent. So it's definitely been a very high, fast-moving market these last few years. And we have mortgage rates. So mortgage rates actually increased slightly from 3.71 a week ago to now 3.75. So I think we found a bit of a bottom as far as where mortgage rates are going to stop. I don't think we're going to see lower yields and interest rates than what we have now. I think that 3.7, 3.75 is pretty much where we are going to be sitting at as far as that 30-year note. I've seen a lot of investors refinancing their investments in the Facebook groups for the real estate areas. But I haven't done it. I think I'm at a 4 for one of mine. It's not really worth it for me. But that is going to be it for today's video. What do you think is going to happen tomorrow with the market? Do you think we are going to be moving higher? Do you think we're going to be moving lower? Let me know in the comment section below if you think by the end of this Friday, the market will have continued to pull back slightly. For me, I think this is a good buying opportunity. I like to see red days. I wish there were more red days. I would actually feel more comfortable putting more money into the market, bigger chunks than what I have in the past. I would like to just throw a couple $1,000s into my own Roth IRA at a given time. But I do think there's going to be volatility, and the idea of just dollar cost averaging lets me sleep easier at night versus, just throwing $6,000 in, funding my max for the Roth IRA, and then having all that volatility. I guess, either way you kind of look at it, you buy in right now, sure, you're going to get that volatility, but if you're buying VOO, VTI, SPLV, something out there that pays dividends, you're still going to be capturing all those dividends throughout the year, the remainder of the year. So maybe there's 45 weeks remaining in 2020. You're still going to be having your money invested, getting those dividends for the year, and you're going to have those dividends in your account working for you on those red days in the market. And then next year, kind of recycling it. I know putting all your money in at the beginning of the year, just $6,000 dump usually plays out better versus dollar cost averaging, but we'll see how this all kind of goes. So that is going to be it for today's video. If you guys have enjoyed this video, definitely hit the thumbs up button below. Leave me a comment below, say hello, or drop me what you are buying this week. Let me know what you think is going to happen by this Friday. Do you think the market is going to lose a little bit of steam, or do you think we're going to continue to push higher to new all-time highs? So subscribe if you haven't subscribed, and I will see you next time. Have a great day. Bye.